Hello, and welcome to our channel Pursuit of Wealth. This channel is your ultimate destination for learning about finance and wealth, investing in crypto, informational and educational trends in finance management. If you are someone who wishes to become wealthy and are looking for smart money management options, then we are fortunate to have found each other. Learning to trade Forex can be a difficult task for beginners. Typically, it's because of unrealistic but common expectations among beginners in this market. Well, by the end of this video, you will get a brief overview of Forex. We will discuss its history, some terminologies, and how exactly you can start with Forex trading, that too as a beginner. So, continue watching the video until the end so you can get all the insights. Let's start by understanding Forex. The foreign exchange, also known as FX or Forex and currency market, is a global marketplace in which traders exchange their currencies. Forex is about changing one currency to another for various reasons like trading, commerce, or tourism. As of April 2019, Forex's daily trading volume hit $6.6 trillion according to a triennial report released by the Bank for International Settlements, a global institution for central banks. Well, currencies are essential because they are used for buying services or goods locally and also across borders. For that purpose, international currencies require an exchange to conduct business and foreign trade. Picture this. If you live in the US and are looking to purchase cheese from France, for that, you have to pay the French in euros or EUR. This implies that the US importer is responsible for exchanging the equal value of dollars into euros. Likewise, it is the same in the case of traveling. Just to give you an idea, an American tourist cannot pay in dollars to visit pyramids in Egypt because dollars are not the locally accepted currency of the country. The currency should have to be exchanged for local currency according to the current exchange rate. There is no central marketplace in the Forex world, which is a great thing. On the other hand, this trading is done through electronic means using OTC or over-the-counter. It means that the transactions are done through computer networks across traders worldwide. Moreover, the Forex market is open 5.5 days a week, and it is available 24/7 during the week. And the currencies can be traded across the world in the big financial centers of Hong Kong, New York, Frankfurt, London, Singapore, Paris, Tokyo, Sydney, and Zurich, almost across each time zone. It means when the trading day in the US ends, it starts anew in Hong Kong and Tokyo. Therefore, this FX market is extremely active at any time and with continuously changing prices. History of the Forex market. Primarily, the Forex exchange market has existed for many centuries. Throughout history, goods and currencies have been exchanged and bartered to buy and sell goods. But trading with Forex nowadays is relatively a modern invention. Following the collapse of the Bretton Woods Agreement in 1971, many currencies began to change drastically against each other, and values of every currency differ based on circulation and demand and are also supervised by the trading services of foreign exchange. Investment and commercial banks manage the big part of trading in Forex markets in place of their clients. However, there are some speculative opportunities also available for individual and professional investors to trade one currency against the other. By purchasing the currency with high interest and selling the currency with a low interest rate, an investor can take profit from the difference of two interest rates in two separate economies. Before the financial crisis in 2008, it was quite common to short the Japanese yen, or JPY, and purchase British pounds, or GBP, and that's due to the interest rate differential, which was huge at that time. And these trades are also known as carry trades. Overview of the Forex markets. Now let's have a quick overview of the Forex market. Essentially, this is the market where you can trade in currencies. This is also a truly non-stop and continuous trading market across the world. But in recent times, large banks and institutional firms have dominated because they act in place of clients. However, over the past few years, it results in much retail-oriented, and investors and traders of all sizes have become involved in the market. Well, there are no physical buildings that operate as trading venues, and this is also an amazing aspect of the Forex market. Rather, it functions on a series of connections established via computer networks and trading terminals. The big players in the market are commercial banks, investment banks, retail investors, and institutions. In comparison with other financial markets, the Forex market is observed as opaquer. And you can trade currencies in the OTC market, and this disclosure is not essential. A prevalent feature of the market is the big liquidity pools of the institutional firms. As a beginner, you would think that economic parameters are the most crucial criterion for examining a country's financial situation and current prices. But things are different. According to a survey conducted in 2019, found that the objectives of big financial firms played a significant role in knowing and determining the currency's current prices. Enjoying till now? Please hit the like button, share, and comment. And yes, keep watching. Understand Forex terminologies. Well, the best way to start your trading journey with Forex is to learn the language, because knowing the terminologies will help you understand things quickly. Here are some of the most common terms that you will need to know as a beginner. Forex account. Forex account is the most basic terminology, and it is used to make currency trades. There are 3 types of Forex accounts depending on the lot sizes. It includes micro, mini, and standard Forex accounts, and they allow up to $1,000, $10,000, and $100,000 worth of currencies in one lot, respectively. Ask. Ask, also known as an offer, it is the lowest price at which you want to purchase a currency. For instance, if your ask price is $1.38.91 for GBP, then the figure mentioned is the lowest price that you want to pay for a pound in USD. Moreover, the asking price is generally higher than the bid price. Bid. This is the price at which you are looking to sell a currency. The task of a market maker in a given currency is to continuously place bids to respond to the buyer's queries. Bid prices are lower than asking prices, but sometimes when demand is high, bid prices can be greater than the ask prices. Bull market. This is the market in which prices of currencies increase. Primarily, it signifies the uptrend of a market and provides news about the global economy. Bear market. In this market, prices of currencies decline. This market signifies a downtrend of the market and also depicts a financial crisis. Leverage. It is the use of borrowed capital to grow returns, and the Forex market is characterized by high leverages, and these are used by traders to enhance their position in the market. Lot size. This is the term used for standard sizes in which currencies are traded. There are 4 common types of lot sizes: mini, micro, nano, and standard. Margin. It is the amount set aside in an account for currency trading. The margin ensures that the broker can meet its monetary obligations even if the trade does not go well for the trader. PIP. It is known as percentage in point or price interest point. PIP is a minimum price movement equal to 4 decimal points in foreign exchange markets. This value can change because of the standard lot size offered by brokers. Spread. Spread is the difference between the ask and bid price for a currency, and the Forex traders make money through spreads, not by charging commissions. Its size is influenced by different factors, which include demand of currency, size of the trade, and volatility of the currency. Sniping and hunting. It is the sale and purchase of currencies closer to the determined points to make maximum profit. How to start Forex trading as a beginner? Before starting Forex trading, it is important to understand that Forex trading is complex and also risky. There are continuously changing degrees of regulation in the interbank market. However, in some countries, trading with Forex is almost entirely unregulated. So, it is essential to look if it is regulated in your country and also what type of protection on accounts you are offered in case of a market crisis. Forex trading is pretty much the same as equity trading. Following are some of the basic steps that can help you to start your journey with Forex trading. Number 1. Study about the Forex market. Although Forex trading is not too difficult, it needs some specialized knowledge because it is a unique project. For instance, Forex trades have a higher leverage ratio than equity trades, and the drivers of currency price movements differ from those of equity markets. You can learn more details about Forex trading from many online courses. Number 2. Make your brokerage account. To start, you will require an account for Forex trading at a brokerage to begin trading. And these Forex brokers do not take commissions for accounts, but they earn by spreads, which are also called pips in the selling and buying prices. Furthermore, as a beginner, it's a better idea to make a micro account for Forex trading that contains minimum capital requirements. These accounts contain different trading limits and also enable brokers to limit trades to a minimum of 1,000 units. Instead, as we discussed earlier, the standard account comes with 100,000 currency units in a lot. That's why a micro account type will help you and you can easily trade with Forex. Number 3. Build your trading strategy. Well, it's not possible to time and predict market movement at a specific time, so having a strategy for your trading journey can assist you in setting better guidelines and roadmaps. An ideal strategy consists of the actuality of your finances and current situation, as it covers the amount that you can put into trading and the amount that you can put at risk in case of any market fluctuation. Keep in mind that the market has an environment of high leverage. However, it can also provide more benefits to the investors who can take the risk. Number 4. Keep an eye on your numbers. When you start trading, it is important to examine your positions daily. There are many trading software that provides trades for daily accounting, so you have to ensure that you are not having any positions remaining and also make sure that you possess enough amount to trade in the future. Number 5. Get rid of emotional equilibrium. Many unanswered questions accompany the emotional roller coaster of Forex trading for beginners. What if you stay in your position for more time and make more money? Or how can you miss the report of low GDP figures that can decrease the value of your portfolio? Being obsessed with such questions can put you in confusion. Hence, it is very necessary to not put yourself in this trading position and get rid of emotional equilibrium, whether it's about profits or losses. Well, that's pretty much it. Hope you get all the insights about Forex trading. Nowadays, it is very easy to open and fund a Forex account online and start trading currencies. But always remember to focus on all the fundamentals of currency values with technical analysis to make maximum profit. Don't forget to ask your questions in the comments down below. In the end, thank you so much for watching. Please subscribe to the channel, like the video, and press the bell icon for more amazing content about wealth management and finance-related videos. Success is coming your way. Keep your doors open. See ya till the next time.